Cybercrime. It's the crime of our era, of our generation, TalkTalk boss Dido Harding said after hackers broke into the telecom's website and stole the personal details of more than 150,000 of its customers. We live in a digital age. Data is everywhere, and it's rare that a company doesn't use some form of IT system in its day-to-day operations. So, whether it's terrorists or 15-year-olds in their bedroom, businesses will continue to be at risk of someone hacking into their systems to disrupt their operations or nick personal information to commit fraud. Buying a software company is one option, but with the issue posing an ongoing threat to businesses and thus rising costs, there is another way that investors could benefit from cybercrime, legally of course. Instances of data breaches are expected to rise, and so too will the premiums insurers charge to cover such occurrences. Hello, I'm Mark Dunne, AJ Bell's Head of Research. Welcome to Breaking the Mould, our regular look at the financial markets. Now, electronics and entertainment giant Sony, dating website Ashley Madison, white goods and mobile phone retailer Dixon's Carphone, and credit checking agency Experian are just some of the companies that have had their systems hacked into. It's a serious problem. A look at TalkTalk share price after the news broke of its latest attack shows how such an incident can affect a business. Cybercrime costs the global economy $445 billion a year, a US think tank claims, and that figure is probably already out of date. It's not only fraud that companies need to be concerned with when looking at their data risk. Extortion and disruption to operations by causing technical failures are reasons to be vigilant. While the reputational damage caused by such attacks is difficult to repair, the financial costs can be covered by an insurance policy. Now, such costs can include notifying customers that their data has been stolen, which could involve a PR campaign. There could also be legal costs if irate customers decide to sue the company, as well as forensic investigations to discover exactly what's happened and what's gone missing. This is a growing market. Global cyber insurance premiums are forecast to reach $20 billion in 2025, up from $2 billion a year today, according to German insurer Allianz. The US is the world's largest market, and cyber insurance is still in its infancy in the UK, with £160 million worth of premiums written in London, according to government figures. But with increasing reports of people using computers to steal information from companies, the need to transfer such huge commercial risk to third parties is set to make this one of the fastest growing classes in the insurance industry. Today, it's a small niche market with no listed company specialising solely in cyber insurance, but there are general insurers that have grown their expertise in this area of the market, and the premiums they collect are also growing. Insurers providing such cover include Hiscox, Beazley and Nove. As always, you need to do your homework. Cyber insurance is a small but growing part of their operations, so you need to look at the performance, financial health and growth potential of the wider business. Nove, for instance, specialises in high-margin niche insurance lines such as covering houses where ex-convicts live. It's profitable work. It has an 89.9% combined ratio, meaning that it makes around 10% profit on the premiums it collects once claims and expenses have been paid. Nove started writing cyber insurance at the start of 2014, collecting £10 million worth of premiums in its first 12 months. It provides cover to household names as well as mom and pop stores, but it's difficult to assess how profitable the operation is, as the company will not disclose the claims it has paid because there's still risk attached to the 2014 account. Cybercrime is a growing trend, and insurance against data breaches is set to become a mainstream market, just like insuring your house, your car or your dog. Those wishing to gain early exposure to the market by adding a provider to their portfolio needs to research the stock available to look at its wider business and not simply buy an insurer because it offers cyber insurance. Thank you for watching, and we look forward to seeing you next time.